Hi guys, so this is SwissCJ-Fx, and today I want to talk about directional bias in trading. So directional bias is very important because it gives you the idea of where the market is coming from and where the market is actually going. So one of the most important things you must understand about directional bias is market structure. That is the key to understanding and always getting your directional bias right. If you don't understand how market structure forms or the formation of market structure, you always get your directional bias wrong, right? So in order to get your directional bias, you have to go to the higher time frame, right? Then if you want to now want to enter the market, you then go to the lower time frame. Now, the higher time frame and the lower time frame is different to the kind of trader that you are. For instance, if you're a swing trader, your higher time frame can go as far as maybe 3 months, 1 month, weekly, right? Then if you're a day trader, your higher time frame can go as high as the daily, the weekly, right? Then if you are a scalper, your higher time can be at maybe 45 minutes, 30 minutes. So based on your style of trading will determine your higher time frame. And your lower time frame is, I'll call it your entry target. So that is where you go for your entry. But in order to understand directional bias, you always go to the higher time frame. Now, the beauty of market structure, right, is that market structure formation is similar in the higher time frame to the lower time frame. So what I mean is that across all the time frames, the market structure has similar formation. The only difference between them is the time it took for it to form that particular structure. Right? So for instance, if you go to the 4 hours time frame, when you look at the market structure formation, right, maybe for instance towards the upside, when you go to the 15 minutes time frame, you will see that it's also similar also. The market structure formation towards the upside, the same thing. The only difference is that the time it took for the market structure to form. So this also I can also go as far as describing this in form of understand. So your understanding towards biology. I believe most of us study biology. So we have what they call the cell, tissue, organ, and then system, right? So the cell is the basic unit of life. So the collection of cells is what makes up tissue. So then the collection of tissue is what makes up organs. Then the collection of organs is what makes up the system. Right? So that is just how, if you with that understanding, right, you'll be able to project it towards trading also, that across all time frames, the market structure formation is the same, right? Is the same across the board. So right now, I want to now show you, let me just give some instance right now. For instance, let's just assume we have 2 time frames here. So this is, let me just see, it's 4-hour time frame, right? And then maybe this is 15 minutes time frame. So let me use this. So for instance, if you see market moving in an uptrend direction this way, right? This is 4 hours. Now you're just seeing one long candlestick, But when you go down to the 15 minutes time frame, this is what you're actually going to see. You're going to see something like this. You're going to see something like this. Right? So in the 4 hours, you're just seeing a long candle, right? Then in the 15 minutes time frame, so this is what you're going to see. You see market moving in the upward direction, then it came down, it broke the structure, then it came down, then it repeat the same thing, right? So what do I mean by market structure? So this is what I mean by market structure here. For instance, markets, looking at this, right? So you can see that market formed three market structure, right? So for instance, this is the first one. This is the first market structure was formed. So the reason why they call it break of structure is that after market has finished forming, so this is more like a sell, right? So this is more like a sell in you want to use biological term. So when price moved up, it broke the first structure, then here is now coming to form the second structure. So this is the second structure that has formed. Then now it has now come here, it has broken up, and now it is now from the third market structure. Right? So market structure is something that comprises of how will I call it? How I call it? Hmm. Okay, so again, so let us see it from let us now do the lower time frame. Right? So in the 4 hours time frame, you see something like this. So you may see a very big candle formation toward the downside. But when you go to the 15 minutes time frame, this is what you're actually going to see. You're going to see, like, you're going to see this. Okay, move, then move down, okay, move down, move down. Right? So though in the 4 hours time frame, all you just saw is just one long candle. But when you go to the lower time frame, right, this is what you're going to see. So this is what they call that. So your ability to know where market is going to go is your ability to identify this candle, which position is it facing, or which stage of the market structure formation is it at. Then from there, you now be able to, for instance, if it's at this stage, then when you go to your lower time frame, then you're looking for this type of something, this kind of market structure to form, just like this. Right? Then if you see this, you'll be expecting this kind of market structure formation to form. So, right. So for instance, if I see this type of market and I want to take my entries, so what I'll do is that I'll wait for market to break the structure, then I'll wait at this point. I will draw my point of interest at this level, right? So you see market came here, I will enter from here. The market goes or break, then again I'll put my point of interest at this level. The market comes here, tests here and now moves up. So understanding the stage or this candlestick, right, gives me the edge to know the place the market is actually going to, and also gives me an idea where I can place my entry. Same thing here goes for the before hours time frame towards the downside. So knowing that the market is actually moving at the downside, so what I'll do is I'll wait for markets to break this structure. When it has done it, I will now place my point of interest at this level. Then when market comes back, it tests this place. I'll enter, then it moves again. Then I'll do it again, my point of interest. Then market came here, test place, then now move to the downside. Then again, then the same thing, right? So now, if you look at this, as I said, this is what I'll call market structure formation, right? But in the real time, you will not see market move in this manner, right? You will hardly see it move in this manner. If market actually moved in this manner, I guess all of us will be billionaires in the forex market, but it doesn't move in this manner. So I'm going to show you how a 90% market structure formation that happens in a market that you almost see it every time, every day in the market. All right, so let me take you to this area. Okay. Okay. So this is it. So this is the market. So this is how will I put it now? So this is the market structure. This is how market structure forms at all levels in the forex market, both in the higher time frame and the lower time frame. Right. So and if you look at this, there are different stages. Right. So you can see there's this stage one, there's stage two, there's stage three, there's stage four, there's stage five, there's stage six, then there's stage seven. So at this stage seven, the market is about to move to the upside to create another market structure. So when that market structure is about to form, it now begins at stage one. I don't know I believe you understand what I mean. So going to the downtrend also, right? So this is stage one, and this is stage two, this is stage three, then this is stage four, this is stage five, stage six, and stage seven. Right? So it's at this stage seven that market is about to form another market structure in order for it to move towards the downside. So when markets are about to form the next market structure, so this stage one now changes to stage one. Then it now continues with this process again. So this market structure you are seeing right here appears 90% of the time across all the pairs in forex trading, even as far as going to maybe the synthetic pairs as well. So though markets, we will not see this particular exact structure, but when you understand this type of market structure and you look at your chart, you'll be able to understand the stage at which it's in. So the purpose of us doing this stage by stage is that, or how will I put, for us to understand the directional bias, we need to look at the higher time frame. And when we're looking at that, we now need to understand which stage at the higher time frame is the market at. Us understanding this stage will now make us to know, are we actually selling or are we actually buying? Right? For instance, if at the higher time frame I'm at stage one, based on what I said initially, we are actually going to be on the buy side. So according to this, we are actually going to be buying only. Then if we are at the stage two level, we are actually going to be selling. That is at the higher, looking at this from the higher time frame. Then if we are at the stage three, we're looking for buys. If we are at the stage four, we're looking for buys. If we are at the stage five, we're looking for buys, we're looking for sales also as well. But depending, we may actually have to just ignore it until we are sure. Then we'll get to the stage six, right? We're looking for more sales. Then when we understand, then we will not get to stage seven, we're looking for more of buys, right? So same thing goes to the downtrend. Then if we are at the downtrend, stage one, we're looking for more of sales. Stage 2, if market is on a downtrend, a higher time frame, we're looking for more buys, right? Then stage 3, at the downtrend in a higher time frame, we can look for sales. Stage 4 to sales. Stage 5, it consolidates. Then stage 6, at the higher time frame, we can look for buys. Then stage 7, look for more of sales. Right? So this is the complete market structure, right? Across all levels, at all time frames, whether 1 minute, 5 minutes, 15 minutes, 30 minutes, 45 minutes, 1 hour, 2 hours, 4 hours, daily, weekly, monthly, all time frame have this market structure. So your ability to identify which stage at which it has actually formed will not give the directional bias of that particular market. Right? So I painted different colors so that it's easy for you to actually understand this. Right? So for instance, this is so at the higher time frame, what do we identify? We see that this is a break of structure that happened here. So we'll come here, and so this is it. So the BOS, so which means break of structure. So that's the break of structure, right? So at this level here is what we call the inducement. Inducement. Or they will call it liquidity, but let me just leave it as inducement. So at this place, this is going to be our our point of interest, our POI. So this is going to be our point of interest. So you can see that so when we go to a higher time frame, so these are things we look out for. We look at the stages, number one. Then we look at has market broken structure or is market about to break structure. Then we also look has market formed the inducement. Then again, the next thing has market broken inducement. Then from there we will now know the direction. So for instance, let me just still go back. We understand this level, right? So when we know that market has broken structure, move it to upside to form in the formation of the market structure. So at that level, we'll just keep on buying. Then when the pullback actually happens, right? Maybe at this level, we may not decide to do anything, knowing that we were expecting an inducement. So when the market now starts going up again, knowing that it starts forming an inducement, then we'll start buying again. When it gets to this level, you understand, we can sell and all that. Then when it now gets to this place, we know for sure that when market comes by, it's coming here to clear out this inducement, to clear out this liquidity, to hit this break of structure for it to now finally move to the next level to form another break of structure. So the same thing happens right here also at the downtrend. So this is the break of structure. Right, then here is our inducement. Inducement. Then this place is our point of interest from this level here. Our point of interest. UI. So this is it. Right. So your understanding about this is going to, for instance, just imagine if we has a swing trader, all you need to do as a swing trader is to be targeting this area. once you get this place, my goodness, like you are going to cash out. Yeah, you're going to be having, a very, very high to risk to reward ratio. Going to have a very high. For instance, with this understanding, you can have risk reward ratio as much as 1:20, 1:30, right? As a swing trader, right? Because you understand this concept. So this is how you get your directional bias right. First of all, you need to understand market structure. And this market structure I've shown you right now forms 90% of the time across all the pairs, right? So that's what I would recommend for you to capture this or snap it or screenshot it so that you're able to cram it and understand it. So now let's just put this into application right now. So this is the gold pair. So right now, so this is where market is. If you look at this, right, if you see here, this is the break of structure that happened here. And this is the inducement. So let me draw it. So this is, so let me just put it the text. Let me just put it here. So this is it. So this is the break of structure that's happened in that place. Then here is the inducement that's finally happened here. This inducement. So looking at this right now we're going to draw our point of interest. So this is the point of interest. So looking at this, so which stage are we at now, according to what I just showed you here right now? So this is according to this, because we are at the higher time frame. This is the daily chart for gold. So according to this, which stage are we at? We are at the 7th stage. So at this level, what we just need to do is understanding that, understanding we are going to buy, but we'll not just buy from the higher time frame, we'll go to the lower time frame, maybe for instance to the 15 minutes time frame, so that we will identify the right point of interest. For instance, now this big candlestick right now represent this, and if we go down to the 15 minutes time, you will see that we're going to see this type of market structure formation. So I want to try to mark it so that you will know that's what I'm talking about. So I'm going to use this box to highlight the I'm going to use it to highlight it. Okay. So right now, so we've highlighted with a box. So let's now go to the 15. So this is daily time frame. So let's now go to 15 minute time. Let's see how market actually moved in that. Okay. So there it is right there. So you can see at the 15 minutes time, do you see it? There's the break of structure at this level. Then market now came down. It moved again. This is the inducement. It came down, it tested at that level. They moved up again. So that is how directional bias actually works. So you go to the higher time frame, know the stage at which is at, then you start doing your entry. So for gold right now is buys. We are going to buy. So at this level right now, you can see that, this is the break of structure. So this is the inducement. So then from here, we can start looking for our buys. At this level, we can start looking for our buys to move to the upside. So from here, we know that market is actually going to move to the upside, right? Going to clear out that level. So with this knowledge, so let's go to another. Let's go to another pair and see how we can apply this knowledge. Let's go to another pair. And so let's go to GBP USD. Okay. So now at the lower time, so at this the high time, this is the daily time frame, right? So okay, so this is the day time frame. So if you look at this, right? So market has broken structure. Then this is the inducement. So let me draw it right now. This is the break of structure, and this is the inducement. This is the inducement. Induce. Right. So at this, so which stage are we actually at? So according to this, so we're actually at stage 6. Now this is the level at which market. So what do you think we're going to do? We can start selling from this region, right? From this gym. So what we're going to do is that we'll go down to the lower time frame and we'll look for a kind of a break and retest pattern. Then we'll sell to the downside. Right? So we'll wait for market to maybe come at this level, test this level, then finally now comes down. Right? So then where are we going to put our TP? Right? So our TP can be maybe at this level. Let me just say at this level here. Can put our TP. Let me see. This is the short position. So you can try put, right? So at this level, so this is close 1:3 ratio, right? So you can try do it that way. Or what you do is that you wait for at which level is the price actually going to test before it now finally start going to stage 7. So there are actually two places market can actually go. So market can actually come to this place, right? Test at this level, then move up. Or markets will come at this level, test at this place, then now finally move up. So there are two places. So as far as I'm concerned, we are at the C stage. We are selling. We are at the selling stage. So we're waiting for when price come and test this level, then we can start selling. So let's now go to which pair we've done. Okay, so let me use US 30. Let me use US 30. Okay, so this is the daily. So looking at this right now, which stage are we at right now? You can see that there's a break of structure at this level. So this is the inducement. So this is the break of structure. Let me see. This is the break of structure that happened at this level. And the break of structure. Then here is the inducement that finally happened. Inducement. So looking at this, which stage are we at? We are at the stage 5. Right? So at this level, you can decide to just leave it. You can decide to leave the market and allow it to do its something until there's a strong pullback to the downside. Because definitely market is actually going to come down back, break this inducement, test one of these regions, then finally now go up. So either we'll leave here or we'll trade using a strategy of trading consolidation, right? You just do your normal support and resistance and you trade. right? So then the next one, let's look for that. Let me just use crypto BTC. Let's use BTC USD. So this is the daily chart. So if you can't understand, you can actually increase the time frame so that you can see things at the bigger picture. Okay, so this is it, right? So as you can see here, market has done break of structure at this level. There is a break of structure at this level here. Break of structure. Then this is the inducement. This is the inducement. So from our understanding, what do you think, which stage are we at? So we are actually at stage 6. We're actually at stage 6. So right now we're looking at sales. But right now you can see that stage 5 looks as if that's finished forming. And so we're looking at price moving to the downside. So we're looking at price coming here, breaking through this level and finally moving up. Or price is actually going to, from this level, break this level, come to this place and finally move up. But there's one thing that we are sure of is that we are at stage 6 and we're actually selling. So what I need to do is to come down to maybe the 15 minutes time frame, right? Then look for opportunities to sell. Look for selling opportunities, and that is it, right? So I've come to the end of this video. So if you enjoyed what I've taught, I would like you to subscribe and share to as many people as possible. And if there's any video you want me to actually make for you, just put it in the comment section, and therefore I'm going to make the video. So see you next time. Take care and God bless.